The market continues to cool as interest rates climb month over month. Today, we're going to go over the stats and numbers for May, and I'll break everything down so you can stay updated on our market here in London, Ontario. It's all going to start right after this. What's going on, guys? Welcome back to the channel. If you're new here, my name is Kendrick Blanchard with HouseSigma Real Estate Brokerage. Make sure to comment, like, and subscribe to stay updated on all future content. And like I said, we're going to go over the stats and numbers for the real estate market here in London, Ontario. If you're looking to get into the market or you're a seller wanting to make a move, I've left my calendar link down below in the description where you can book a one-on-one directly into my calendar with a few simple clicks. Let's get into it. There's been some real estate news since we talked last. The government of Canada recently changed the rules regarding the CMHC Shared Equity Program. The program was designed to help first-time homebuyers during the craziness we've experienced over the last couple of years by matching your down payment of 5% for 5% ownership in your home. The idea was that if your home increased in value, so did the government's investment. As mentioned, the shared equity program changed some rules. As the market is starting to reverse, the government is trying to limit their losses. So under the new rules, the maximum amount the government's loan can appreciate is 8%. On the other hand, the most their loan can depreciate is also 8%. So if you've already paid back this government loan, you can apply for your reimbursement if you paid more than the 8% in appreciation. In other news, the Bank of Canada increased interest rates again for the third time since March. On June 1st, we've seen another 50 basis point increase with another expected round of hikes on July 13th, where some are speculating that we'll see 75 basis points to further the fight against inflation. Enough of that. Let's jump into the stats. The spring market has been upon us for some time now, and we continue to see the average sale price falling as interest rates continue to climb. For the month of May, the average sold price of a home was $743,000, down from $747,000 in April. Comparatively speaking, a 0.5% change isn't a big difference. We could be seeing a possible plateau for now until we see the results of our latest interest rate hike on the market. I've discussed this before, but I'm thinking the factors behind the weakening in buyer demand could be many things, including interest rates, people being recalled to the office full-time or hybrid, meaning less out-of-town buyers, again, uncertainty with the war out east, or just plain and simple more options to choose from. If you're on the search for a new home, there's quite a few to pick from. Currently for the month of May, the active listings came in at 1,025 versus April at 737. With inventory continuing to climb, you're not going to have trouble finding a home for you and your family, and you might even get an incredible deal if you're working with a great agent. Now, when we look at months of inventory, and if you don't know what that is, it just means if no more houses were put on the market starting today, it's how long the current active listings would last if homes keep selling at the rate they've been going. There's been a change here as well. Currently, it's at 1.7 for the month of May. This means that everything would be gone in just under 2 months' time. With that said, I think we'll continue to see inventory climb as we push into the summer months here. The sales to list price ratio also fell in May. And for those who don't know what a sales to list price ratio is, it just means the amount over asking that a home sold for. In May, this ratio was 108.1, down from 115.5 in April. That's a 6.4% difference. For example, based on the ratio of 108.1, if a home is listed for $700,000, it would have sold for $756,700. Now, for the buyer's perspective and understanding pricing strategies here in London, we're still seeing some homes being underlisted, meaning if a house is worth $700,000, they're going to list it at $599 to attract more buyers to the property. And when that doesn't work out, they'll just increase the price to what the home is actually worth. With that said, I'm only really seeing this strategy work on unique or elegant properties. We're continuing to see more and more agents list the home for exactly what it's worth and not wait out for offers at all, which is amazing because it eliminates the guessing game for home buyers to what's in the price range and what isn't. Now, from the seller's perspective, if you've chosen an agent and they have a great track record, then trust the pricing strategy that they present. Every home is unique and there's no one way to price or market a home. Just know that homes aren't selling in 2 to 3 days anymore, and it could take up to 2 weeks or longer. But at the end of the day, it all comes down to how they market the property. Now, this might sound obvious, but here's a few marketing tips if you're having trouble selling your home. First of all, let's make sure there's a for sale sign on your front lawn. Professional photography is done. The property is being posted on the Toronto Real Estate Board. Open houses are being done. Feature sheets have been made. Facebook ads are being run, and the home is being marketed on social media. There are a few extras that I do, but I'm just giving general advice here because I recently had someone call me and say that their out-of-town agent put their home for sale on MLS, and that was it. Literally nothing else. As we start to enter a more balanced market, you're going to want to start looking for agents who have a detailed and thorough marketing plan for your home, because gone are the days where houses sell themselves. Moving forward, I think we're definitely seeing a correction in the market, and home prices will continue to slowly decline as interest rates continue to rise. But we'll know for sure once June's data comes out next month. Honestly, my thoughts haven't really changed here. There are many buyers holding off to see what happens with hope that the market continues to come down. But again, it's a double-edged sword. As home prices go down, interest rates go up, which means it could very well end up costing the people who decided to wait more in the long run. And from the seller perspective, many of these sellers don't have to sell. They want to sell to take advantage of the equity gain these last couple of years. And if they can't get full value for their home, they'll just take it off the market and hold on to it for a while. But that's just my opinion. I'm curious to know what you think. What do you think is going to happen moving forward? please leave your thoughts down below. That was London's main market update. Please share this with your friends if you found this information helpful. And if you have any questions, just reach out to me directly. And if you're looking to get into the market or you're a seller wanting to make a move, just head down into the description and use my Calendly link to book a one-on-one call with me directly. I hope that helps everyone. And please make sure to comment, like, and subscribe to the channel. And I'll see you on the next video.